Okay, looks like I am live. This is just going to be a short little show as I'm not sure how effective I'm going to be for more than 10 or 15 minutes. I'll do my best. So the dollar index rally, which started on August 18th when the dollar index was at 92.27, remember that there was a record net short position in the dollar index. Looks like that may be short-lived. The dollar bulls were talking about how the dollar rally was going to go on for a while. Gold had started to correct. The gold price has already started to rally. But we just saw this news story that came out recently. And it looks like the Fed, inflation is, according to the Fed, not according to people on Main Street, not according to the average Joe or average Jane, that is seeing their bills, their healthcare bill, their food bill, all these bills going up almost every year, consistently high single digits or double digit increases, and even the crooked government inflation data is showing big increases in grocery store food bills and healthcare bills. But the Fed is saying that official government inflation is too low. So they're trying to prevent, I guess, a rally in the dollar. And the US Treasury has enormous borrowing needs because, remember, the real economy is still not functioning well, which means, again, this is the cash flow problem that I've talked about. So even if there was a dollar rally, it was not going to last for a very long time because the US Treasury has to borrow more. I've been talking about this for the last couple weeks, that people forget in the last couple months. There was an op-ed from the former New York Fed president. It's there on your screen. You can see it. You should go read the article. I'll put it in the information and description section afterwards, that a $10 trillion Fed balance sheet is coming. The Fed's official balance sheet, as of right now, is only around $7 trillion officially. Who knows what it really is? Ron Paul thinks it's a lot more than that. He wants the Fed audited again. I agree with Ron Paul. I don't think they're going to allow an audit at this point, but if the Fed's official balance sheet goes to 10 trillion, I mean, that's all these other governments are all printing too. That's a point I wanted to bring up on the last live stream show with Europe, and I forgot because unfortunately I'm having memory problems. This is just part of, I just have to manage it now. It's unfortunate, and why I'm going to be doing a lot less live stream shows until I figure out exactly how to deal with my health problems better. And unfortunately, it's not really working. It's winning right now. The problems are winning right now, but if the European Union, if the European Central Bank, if the ECB is printing more, if they're creating more euros than the Fed is creating dollars, if the Fed takes a break from increasing the balance sheet, the markets will start to price this in. So the markets will see on a relative basis, if you're a global macro trader, it's a relative game. So they will look at the balance sheets, the rate of change, as Keith McCullough of Hedge says, of the ECB, European Central Bank, versus the Fed, and see that the ECB is doing even more stimulus lately than the Fed is. Because the Fed's official balance sheet, I don't have it up right now, but I think over the last 3 or 4 months, the Fed's official balance sheet has not grown. So in terms of a net increase, the Fed's official balance sheet has gone basically nowhere, I think, since early to mid-June. Now, in reality, if we actually did an audit, who knows? But there is a lot more spending coming from both political parties, as part of stagflate and tax and lie. Now, Joe Biden, if he wins the election and then Kamala Harris takes over shortly afterwards, or however they handle the secession, not the secession process, the transition process, because either Biden's going to be the weekend of Bernie's president, or Kamala Harris, he's going to step down for Kamala Harris. We'll have to see what happens if Biden does win. But Biden's going to be more of a tax president. The taxes, Jeff Gundlach, billionaire bond fund manager Jeff Gundlach, has said that in certain cities and states that the effective tax rate may be 70%. Under Biden if he wins. He was looking at the tax plans. Biden isn't going to win. Well, we don't know if the votes are in the mail, who knows how they rig it. But the bottom line is, if the Fed is saying that they want that inflation is too low, and it looks like they're coming up with a new type of inflation targeting. So the Fed is expected to use the annual Jackson Hole Symposium this year to change the way it addresses inflation after it has taken numerous extraordinary measures to fight the impact of the global pandemic on the economy. Treasury yields have been rising ahead of a Thursday morning speech. The rise in treasury yields that people are worried about, it's only temporary. The Fed has already said, Lael Brainerd has already telegraphed this a while ago, they're going to start yield curve control. Okay, Jim Bianco Research has said that yield curve control is basically already underway. The majority of the U.S. Treasury yield curve, I haven't looked at it this week, but last week I did a video on it, and most of the yield curve, I think from the 1-month Treasury up to the 10-year, I think it was all within about 60 basis points. So it was all packed tightly together. Now there's bond fund managers screaming about deflation like Lacey Hunt that are making money profiting off front running all the central banks and the Fed and all the bond buying and screaming about deflation while the central banks are just monetizing more. I don't know who pays these bond fund these deflationist bills, but they must not be buying the same things I'm buying, because my bills just keep going up pretty much every year, and I eat a lot less food. Most days I only eat one full meal a day, and my bills are still up. Powell is expected to discuss, so even if Treasury yields do rise, the Fed has said they are committed, like the Bank of Japan, like Japanification, like what Japan has done, to just monetizing more and more debt and signaling to the private sector that they won't allow yields to rise. Powell is expected to discuss a policy of allowing inflation to range on both sides of a target, letting it rise more than the Fed might normally do to help keep the economy from being trapped in low growth. Okay, the chairman, in a much anticipated speech tomorrow, is expected to discuss, Chairman Jerome Powell, much anticipated speech tomorrow is expected to discuss the Fed's policy framework and specifically how it will alter its posture on inflation. The Fed has had a 2% inflation target, but in the decade since the financial crisis, it has more often than not seen inflation fall below its target. More often than not has seen. That's bad grammar here in the article. More often than not has seen inflation fall below its target. That's how it should read. So in reality, the reality of people's bills, the average Joe and Jane on Main Street, your bills are going up pretty much every year on the necessities to survive, part of stagflate and tax and lie, while the government screams about deflation and there's not enough inflation. And in the overpaid Keynesians like Lacey Hunt and others then say there's too much deflation. And then they just front run the Fed and the other central banks on corporate bond trades and government bond trades and make enormous profits while they're screaming about deflation. That's how the casino works, folks. So the other article that came out, besides the op-ed from the former New York Fed president, Tuesday, July 21st, that I wanted to bring to your attention, former hedge fund manager Jesse Felder posted this on his Twitter to remind me. I had seen the article a couple months ago and forgotten about it. So it's a 1 trillion glut of bonds is dwarfing central bank demand. The world's major central banks aren't purchasing debt fast enough, leaving almost 1 trillion of new sovereign bonds looking for buyers in the months ahead. The flood of fresh debt sold by governments to fund pandemic rescue packages threatens to dwarf central bank buying. The European Central Bank right now, on a relative basis, is doing more than the Fed. Now, if we did an audit and we found out how many corporate bonds the Fed is actually really buying, the truth would probably be much different. But the stuff that's actually public, the public information without audits, without real transparency of government, is that the European Central Bank for now, over the last couple months, is doing more than the Fed. The flood of fresh debt sold by the dollar has started to rally, and the Fed's official balance sheet hasn't moved much, and you have all these professional money managers and deflationists and dollar bulls talking about real yields and gold's going to crash, blah, 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 blah. Yeah, and then if the Fed's official balance sheet 6 months or so from now is well over 10 trillion, we'll see what they say where gold price is. Because what we've seen for a while now is when the Fed's official balance sheet, it increases a lot by trillions of dollars, the gold price lags. So eventually the gold price starts to react to the Fed's official balance sheet increasing a lot. So the Fed's official balance sheet, I think before the crisis, was a little over 4 trillion. So they added around 3 trillion, maybe a little bit above that over the, since February. Actually, I think the Fed may have gotten their balance sheet a little under 4 trillion before February and March. So they've added a little, quite a bit over 3 trillion. But the gold price eventually did start to price that in. The gold price in dollars started to price in how much the Fed's official balance sheet. Now, obviously, the gold price has a long way to go. I don't think we're anywhere near the end of this gold bull market. Tell me when the governments are going to stop devaluing their currency, race to the base. Tell me when the central banks are going to stop adding to their balance sheets. Tell me when the politicians are going to want to stop trying to solve all their problems with either increasing existing taxes or layering on new taxes. Because in that environment where they manipulate interest rates lower and they're taxing you, gold becomes very attractive because you're pulling savings and metal out of the system, out of the banking system. You're trying to take the gold out of the system so it cannot be, your savings cannot be taxed in the bank accounts or normal assets. And then that's why FDR in 1934, that's why he banned gold, or at least tried to, for American citizens, because that's what was happening. The flood of fresh debt sold by governments to fund pandemic rescue packages threatens to dwarf central bank buying and swamp markets in the United Kingdom, Canada, and Australia. According to Bloomberg calculations, policymaker purchases will also lag issuance in the US and Japan, where a continuing tilt toward buying short-term maturity debt would risk allowing yields on longer-dated bonds to rise unchecked. They're going to have to buy everything. The part of yield curve control, it's unlimited. It's another QE unlimited or QE infinity. So they're going to have to buy all the yield curve. Would risk allowing yields on longer-term dated bonds to rise unchecked, hurting pension funds and life insurers that rely on these markets. And that's why the pension funds and others are doing all these hedge fund trades. Because of financial repression, because of what governments and central banks are doing. Governments don't want to cut back on their budgets and their spending. These politicians and bureaucrats that are grossly overpaid and they're getting their friends unbidden contracts. And they're going into the private sector after a career in public service, and they're making even more money, and they're getting all this pork and corruption. They don't want to cut back, so they manipulate interest rates lower, so governments can continue the spending binge. And then pension funds, which are supposed to get a 6 or 7% return, they're not getting it. So to try to get it, they have to take more risk, and then they're leveraging up. They're doing these over-leveraged, very risky bets on currencies, bonds, and derivatives. So you have all these entities that should not be doing hedge fund bets, and it starts with what the governments and the central banks are doing. And I've covered this on past shows. Some of these central banks are even doing it. There's been public comments that these central bankers, not ones in the US, but other central bankers in other countries, are even doing these casino bets on currencies and bonds, leveraged trades. By contrast, most of Europe is set to benefit from the European Central Bank's purchases and may offer the best shelter for investors worried about a potential surge in bond yields. That's if you're just a short-term bond trader. Europe is a mess. The debt deluge comes after, as I talked about on my last show, where how much of their percent of GDP is in bailout loans. I think it's enormous for European governments. I had a really good chart. Might be over 30%. The debt deluge comes after a flurry of interest rate, 30% of GDP on bailouts from the pandemic. The debt deluge comes after a flurry for certain European countries. After a flurry of interest rate cuts and expanded asset purchase plans by central banks left investment playbooks in shreds, net surplus of $980 billion in expected issuance beyond central bank purchases. Here's a look at the supply and demand dynamics of the world's major markets in the second half of the year. The Treasuries market alone could see more than $1 trillion in net bond supply in the 6 months through the end of December 2020. December 31st, 2020. Strategists are predicting sales will comprise fewer bills and more longer-dated notes. So far, domestic buyers have supported U.S. debt, but some of the market's most loyal investors appear to be stepping away just when they're most needed. Pension funds typically buy treasuries to match their long-term liabilities, so then they could also take those treasuries and use them as collateral in repo and a lot of other places, and then do those leveraged hedge fund bets that I talked about earlier, yet a proxy for their purchases of longer maturity bonds. Holdings of so-called stripped treasuries has fallen consistently since February. With this in mind, positioning for a steeper yield curve when longer maturity bond yields rise faster than shorter dated counterparts has become a popular trade. I don't think that's a good idea. If the Fed's doing yield curve control, what they're going to have like a tiny little steepening, I mean, it's going to be capped. You're going to make money maybe if you're a short-term trader doing these leveraged bond trades, front-running the central banks, maybe for a short amount of time. They've been doing this for a while. I don't know how much longer it's going to last, but it's going to last at least for a short amount of time longer. There's too much money to be made leveraging up these bond trades, and then the central banks are going to bail you out. Look what happened in February and March and all the large hedge funds that got bailed out. So it talks about the European bond market, Japan's treasury market, UK debt, and New Zealand. There's and Australia here in the rest of the article. The bottom line is that the Fed has already telegraphed that the balance sheet is going a lot larger. The normal amount of tax revenues prior to the pandemic are not coming in, so there's big shortfalls. The Fed is going to have to monetize that debt because the U.S. government doesn't want to cut back no matter who's in the White House after the election. Finance and Economics says low inflation. Yeah, right. Well, this is official government data. Stagflate and tax and lie. This is the lie part. So they need stagflation. They need inflation at all costs. They need devalued currency. They need to raise taxes, mostly on property taxes now. And then they need to lie about it. I haven't looked into what would you think of a land value tax instead of an income and corporate tax. I haven't looked at the land value tax that much. In general, governments are way too big. So they're looking for new sources of tax revenues. There's going to be a lot of new taxes in the not too distant future. But the main source of tax revenue for state and local and county governments, like municipalities, is property taxes. So I've seen studies that it's over 60% of all the tax revenues annually are property taxes for those local governments. So they're going to go after property taxes, and that's why you're seeing people move, because governments don't want to cut your property taxes even in a bad economy. Property taxes are going to be going up. It's a new normal. It sucks. There's no, again, I keep repeating this, and it's really sad. It's true, though. There's no shared sacrifice. With the overpaid politicians and government officials, they're not sharing in any of the sacrifice. They're not taking pay cuts. They're not trimming their government budgets. So if the economy is doing that bad, they're just seeing you as cows, tax cows, that they can milk more. So we're gonna see a lot more inflation. I don't know if the government data is gonna say it or not, but clearly, if the Fed is allowing an article like this on CNBC, because there's other articles that are similar to this on the other mainstream financial websites. So the Fed handed out some type of press release about tomorrow or some type of leak. So I guess they don't want a surprise. So they do want more inflation. I don't know how much of it's going to be reflected in the government data, but you're going to see it in shrinkflation in your food at the grocery store and restaurants. I'm already seeing it a lot at restaurants. I ate at a steakhouse a couple weeks ago, and I hadn't eaten there since, I think, January. And the price of the ribeye, it was the same size ribeye. It went from $29 up to $37 from January to, what was that? It was either end of July or first week of August that I ate there. So that was about a little over a 27% increase in steak prices in not too much of a time frame. And what is that going to do? Over a certain period of time, the average marginal consumer is going to eat less steak, or they're not going to go out as much. I've heard the exact opposite for vegetarian and vegan, that certain vegetables cause inflation. Inflammation. I'm thinking about obviously monetary policy. That certain vegetables cause enormous inflammation. So I've heard conflicting evidence. I've read a bunch of different nutrition books over the years. It's tough to know which one's reliable and not. Which information is reliable and not. Also, it might not always just be my diet. It could be the water. Who knows? Okay, well, I want to thank everyone for listening. All the articles I discussed, so the $1 trillion government debt shortfall article that was from July 21st, and the op-ed by the former New York Federal Reserve Bank President Bill Dudley from June 22nd, a 10 trillion Fed balance sheet is coming. If the Fed prints more, or if the Fed creates more dollars and expands their balance sheet faster on a relative basis compared to the other central banks, the dollar will be weaker. Because global macro trading in currencies is a relative game. So right now, the dollar index has rallied since August 18th, and it looks like the rally's sputtering out. It didn't last very long. I don't even think it didn't even last 10 days, if you look on the chart. And here we are. The Fed is putting out press releases that there's not enough inflation. So they clearly don't want the dollar rallying. If the dollar does rally, then that'll give the people here in DC Congress cover for another stimulus. Although before the election now, I don't think that the Democrats in the House of Representatives would want that. And the Republicans seemed against that too. I've heard people say that in Congress they don't know or care about the dollar, but there's evidence out there that the U.S. Treasury and the Fed had 16 meetings in the month of July. There were 16 meetings in a single month. There was official meetings. These are official meetings there was between the Treasury and the Fed. That's some serious stuff. You normally don't have anywhere near that in a single month. 16 meetings. So I think what is happening is the Congress, key members of Congress, and then also like the Treasury and the White House are getting briefings about the dollar by the Jerome Powell and key members of the Fed. I think things are that precarious because of the lack of Treasury demand. Super chat from Anthony, who is also a Patreon account contributor, one of over 1,000. There is over 120 pieces of unique content behind the paywall, only $5 a month. A lot of articles, audio podcasts, and stock charts, technical analysis stock charts behind the paywall. So check that out. Again, thanks everyone for listening, and take a look at my Patreon if you want more in-depth research. There is a lot of articles behind the paywall for a very cheap price compared to a lot of other analysts that either write. I don't write. It's not really a newsletter. I just do research and I talk about specific industries or companies, or if someone released like a research report and is promoting it all over YouTube and is paying a bunch of YouTube pumpers to pump it, then I might poke some holes in it. There are some problems.